I think my issue is not conviction. I guess I've got the conviction is I'm mostly worried about the other side of it, or where I could lose conviction. I think there are some indicators that I'm paying very close attention to, which one of them is the productivity in the global economy. If we start seeing the global economy improve its productivity relative to, in particular, I would say growth, units of growth relative to units of debt, meaning we're going to need, if we start seeing a trend where we're using less debt to generate growth, then I think that's a change in my view. That's certainly not what we're seeing today. We're seeing more units of debt to generate less units of growth, and therefore debt to GDP continues to grow in an environment where we have, I would say, incredibly constrained supply, given the fact that capex and capital spending cycles of commodity producers continues to be very low, not high. And the other part of it has been the wages and salaries growth, which we haven't seen in many, many decades. That's a structural change. The reckless fiscal spending that is happening today, I think it's another thing to add. You have this very extensive fiscal agenda, from infrastructure development play to peak inequality, to the geopolitical environment that also requires more defense spending in different parts, and even the Green Revolution will drive fiscal spending as well. The fourth thing that is important is the deglobalization trends. If I start seeing a reversal of those trends, certainly I will change my view. I think we're at the beginning of those trends right now, and I think we'll see that persist for much, much longer than just a few years. And so all those are playing together into this inflationary environment, maybe a new macro regime that we haven't seen in many decades, that we've seen in the 70s, in the 40s, in the 1910s, maybe in a different way today, because we have a trifecta of macro imbalances. We have the debt to GDP problem of the 40s, we have the inflation problem of the 70s, and then the speculative environment of the 90s and the 1929 and late 20s type of the speculative environment. And so those become very large political constraints to policymakers when it comes to fighting inflation. So those are the things that I think are driving my views about why I think commodities will continue to outperform. And it's not going to be a straight line up. It's going to be a lot of ups and downs like we've seen now. And it's time to be accumulating assets and buying the dip, in my opinion, when you see those times.